You're watching Beyond Market. Welcome, I'm Esther Awuni. Many thanks for joining us today. On today's show, Jumia Nigeria CEO joins me to respond to some allegations in a recent report by Citron Research. You can join today's conversation with the hashtag Beyond Market, and of course you can follow my Twitter handle too at Esther O. Awuni. Now, Citron Research says Jumia reported financials show a stagnant business that has burned through $1 billion and has moved the suckers, what it calls the suckers game, to the U.S. markets. Juliet, Anammah, CEO of Jumia Nigeria, joins me for this discussion. Juliet, thank you. It's a pleasure to have you on the show today.
Thank you very much.
I mean, this report is all over the news, and it's been a while now, and we've seen different reactions, and there's been no official response from Jumia. And but before we go into that, one thing we're also waiting for was the Q1 results, which literally just came out. So I wanted to quickly take a look at your Q1 financials. GMV, that's gross merchandise value, grew 58% in the first quarter, leading to a 102% increase in your marketplace revenue. Break down the numbers for us.
Okay, so there are 4 pillars of our strategy, and basically over the Q1 2019, we delivered on those 4 pillars. The first one is GMV, like you mentioned, 58% of growth in GMV. And GMV is made up of our active consumers and the spend of those consumers on our platform. Then the second one you mentioned is our marketplace revenue. Okay, the marketplace revenue comes from our commissions we earn from merchants, fulfillment fees like shipping fee, which consumers pay, and then of course logistics services which we provide to sellers, and markets and advertising services which we provide to sellers as well. So let me just, on that revenue part, talk very briefly about it. We represent our business using more of GMV because there's shifts in revenue, the way people typically describe revenue. There are shifts in it that are driven by a combination of first-party sales and third-party sales. Now, first-party sales is when we buy stock ourselves, we sell it, and we make a margin on it. So typically, you recognize in revenue the full value of that item. Now, in third-party sales, however, we only recognize a commission because this is a product that was listed on our platform by a seller, and the only thing we earn is a commission. So in terms of actually looking at how our business is, gross merchandise value, which captures the full value of both what is first party and third party, is a better metric to use to look at our business. And that's what is common practice in other platforms, not just on Jumia. So over time, you see that because we are a marketplace and we do less and less of first party. In fact, we only use first party, which is buying the stock ourselves and selling, only to fill gaps in maybe some products where consumers want it, there's an unmet demand, and we don't have enough supply in the market. We use it very opportunistically. Okay. So to that extent, you find that revenue, the way it is usually described, is not exactly a good reflection of the way we look at our business. But marketplace revenue, on the other hand, is looking at just the marketplace part, the revenue from the marketplace part. And as you mentioned, it's grown over the last period-to-period comparison by 102%. Like I mentioned, it's made up of commissions, delivery fees, logistics services, and advertising services, which we also provide to sellers.
We're going to come back to some aspects of the report, especially, some new partnerships that you had in Q1, and how that's going to help boost your long-term strategy going forward. But I wanted to get into this report by US-based Citron. The crux of what it was basically saying in the report was, look, what was reported by Jumia to the US SEC, Securities and Exchange Commission, was different from what the market it reported to the market, and basically saying that, look, Jumia is not a profit-making business, and a host of other allegations, as it were. Let me ask you, when you first saw that report, what was your reaction?
Well, our reaction was that, look, we are now a public company, so we understand that we would expect those kinds of situations going forward, and therefore we need to be fully aware of it. But really, coming back to it, this is taking selected, biased, and in some cases unverified facts. We declare possibly the intent of damaging a brand and profiting from it. So that's why, we sort of waited. So we didn't jump and respond to it initially. We just waited. So, okay, fine. Our Q1 results are coming out. We've shown very strong growth. We've demonstrated that we're still on our path to profitability on all the dimensions that are relevant to our shareholders and investors, be it GMV, be it monetization of our platform, be it our EBITDA in terms of adjusted losses, or be it in terms of adoption of Jumia Pay on our platform. So for us, that's more important to be able to share with the public at this point in time. Of course, we would respond to some of the issues that were raised.
Now, the guys at the Citron pointed to the confidential investor presentation, which is not something that's public knowledge, and they say that many of the things, there were material discrepancies in what was told to investors compared to what we actually did see. But would you say that there's absolutely nothing changed, or was different from what was reported?
Absolutely nothing changed. Yes, please go ahead.
Yes, go ahead.
So absolutely nothing changed. We stand by what we presented in the prospectus. We stand by the risk factors which we had highlighted, and in the material respects that they are. We stand by all of that. And what we want to differentiate is to say, look, the way we recognize our GMV and our active consumers is gross of cancellations, of failed deliveries and returns. And that's what we represented in the prospectus.
Because what was there were two different numbers. So yes. Is it that what it was taken from?
It was taken for active consumers, they were taking it after. So rather than gross, which is what we had presented in the prospectus, in our F1 filings, it was taking the data that was looking at it after cancellations, failed deliveries and returns. So it's a completely different number that is being compared with what we had in F1 filing. And then also you look at the active sellers. We look at our active sellers on the
That's the active merchants. As put in that
yes.
report. Okay.
We look at active merchants at the 12-month look-back period. That's the way we look at it. Who are the number of active sellers we've had over a 12-month period. But that number that was shown there, it's for 1 month, December. So how do you, compare apples to apples?
Now, this is not the first time Citron would target a company. They do it all the time, and they're known for it, actually, going short on the stock, hoping that, when that news goes out, there will be a free fall and they can take that short position and benefit from it. Usually when that happens, the banks that back up those companies immediately come to their defense. I'm not sure that has happened. Has that happened?
Citibank has done that. Yes, Citibank has done that.
Was it Citibank and Goldman Sachs, or just Citibank?
Citibank, I'm very certain about. May have been another response, but I'm sure about.
Would you say that was enough? Because you're in a new market and you're looking at new investors who putting their confidence in this new company out of Africa for the first time, and obviously there's a lot of hope that things are what they are, especially on paper, black and white, and then this comes out. So I'm just wondering, was that enough reassurance coming from Citibank?
I think let's work back a little bit to say who are the types of investors that invested. Okay, and this is linked to one of the questions which people had asked a number of times. So why did you list in the New York Stock Exchange and on prior discussions of this nature? These are seasoned investors. These are people who have invested in tech space. They've also invested in specifically in e-commerce platforms. They've invested in Amazon, Alibaba, Mercado Libre. They understand the terrain. They've also seen this before. So it's less of a surprise, I would imagine, in their case than in our own environment where, potentially this kind of asset class is not as well known.
Sorry to come in here. When you say they understand the terrain, are you talking about the e-commerce terrain in Nigeria?
E-commerce terrain generally. So they understand, and also in case of this kinds of situations where someone publishes something, it's also happened more outside of Nigeria than it has happened before. So they also, they've seen a lot of these things happen.
Because I asked that question because what this report, the Citron was trying to, put out there was that, look, the e-commerce landscape in Nigeria and Africa is not what it is. Okay. That there have been big players who have come and lost so much money and left. Yeah. So it's not for the faint-hearted.
Oh, of course.
So that is what
I agree totally. It's not for the faint-hearted.
But the way it was positioned, the way it was put out there, the way
yes.
that information was put out there, obviously, I mean, yes, it's a difficult term. We know that, but they put it in a different way. That look, it's not worth the trouble. Let me put it that way.
Sure. So my response to that is to say, look, you know, here we are in Africa, right? It is our responsibility. We decided, we looked at this continent and said, look, there's an opportunity here to actually build a solution that can be a positive force on the continent. It's not just to be e-commerce. We can actually do something on the continent. Yes, has it been easy? Of course, no. We've had to build a logistics platform. We didn't plug a model from some markets and put it in here. We had to build it from scratch for the continent. Whether it's a marketplace platform or logistics platform, or even the way we're doing payment, we're doing it the way that is relevant for the market, right? So we are convinced, and our consumers who buy on Jumia today, also when they buy on Jumia today, they're saying, yes, I know because I can place an order and I know it's going to be delivered. I think that we have a higher responsibility to say, look, we know it will work in Africa because it's currently working. Someone is doing it. The fact that someone else did it before and it wasn't as successful does not now put a mark on Africa and say that don't go there. We are the ones who live it. We know what is possible. And we need to be the ones to show that it is indeed possible in Africa. That's my response to that.
Now, speaking about responses, there hasn't been an official response from Jumia. I imagine there are a lot of, I know they're sophisticated investors, but there are also people, you have customers here in Nigeria who have also seen that headline. There's still no official response from Jumia. Why is that?
Because, like I mentioned, we just had our Q1 numbers released today. So what we had wanted to do was, rather than jump immediately and just respond to it, we wanted to say, okay, since our Q1 result is coming out, let that come out. At least we share that with the public, and then we can still respond to this article. So we will still be an official. Yes.
Okay, Juliet, we're going to take a short break. We thank you for your time so far. Take a short break, and we'll be right back to pick up from where we left off. I've been speaking to Juliet Anammah. She's the CEO of Jumia Nigeria. If you're just joining us, Juliet Anammah, CEO of Jumia Nigeria, is with me today, and we're getting Jumia's side of the story after US-based Citron Research leveled some allegations against the company. Thank you, Juliet, for your time so far.
Thank you very much.
Let's get back to the numbers, Q1, how it performed, your financial performance in Q1. Apart from the numbers, there are also some partnerships that you also got into. Could you tell us about that?
Yes, so we, in Q1, we also signed a partnership rather, with MasterCard. MasterCard has the goal of also growing in Africa, just like we are. And so we signed a strategic partnership to develop online payments, Jumia Pay. So they invested 50 million euros, and the objective of that is to help us with developing, more virtual wallets on Jumia Pay, basically pushing more and more of and developing online payments on our platform.
What about other partnerships? Like I know you did one with Xiaomi.
Yes.
Tell us about that.
We also have a partnership with Xiaomi. So, so stepping back a little bit, the value proposition for a brand like Xiaomi is to say, okay, I'm coming into Africa. I want to grow on the continent, and I want to see one brand that I can partner with, and I have access to multiple markets in Africa. So Xiaomi is just an example of that. And we had that partnership with them to grow. They have their online store on Jumia, and basically that's the means in which they grow their online footprint on the continent.
Now, talk to us about the IPO. What material changes have happened since that IPO in terms of people? No, let me not get into it. Let me not preempt you. Talk to us about those perhaps the positives that have come from that IPO.
Oh, great positives in terms. So first of all, the IPO had several objectives. One of the objectives, of course, was to, in some respects, also highlight the continent. So Africa as a continent, and say, look, there are great things happening on the continent. Highlight our brand also, and be able to gain, so for example, some brands who may never have heard about Jumia before, perhaps with the IPO, they have now heard about us, and we're seeing that also. We're seeing a couple of brands approach us and say, okay, how do we work together, both local brands as well as global brands as well. So that has been a good positive. We also see positive in terms of, more interest, logistics partners who say, okay, what other areas are you guys growing? How can we support you? And so on and so forth. So it has been positive.
And all of that fits into your 4-pillar strategy in terms of the number of partnerships that you were expecting or hoping would come in along the way. Is it changing it significantly, or how is it reshaping or fitting into that strategy now?
It is fitting into the strategy, because the strategy was always about, like I mentioned, four pillars. So on the GMV part, GMV of course is driven by active consumers and how much they spend on our platform. So if you work GMV back a little bit and active consumers back a little bit, you also see that it based on the assortment that we have, how much assortment we have on our platform, the number of active merchants we have on our platform. All of these drive the interest of consumers to say, here's a wide selection for me to come and buy on Jumia. So the partnership part, in terms of the fact that it's bringing in, wider assortment, more interesting products for consumers, is tying into the GMV pillar. Okay.
Yeah. Let's talk about, still on the GMV revenue versus that from the marketplace. Now, I know that your strategy is to, over time, focus more on revenue that will be coming from the marketplace and the third-party sellers. But obviously, there may be a significant dip in overall revenue. I mean, is that something you prepared for?
Yes, of course. So when you look at our business 2015 versus 2018, and you look at pure revenue, you will see that there's a drop. The reason for that, and there should be, is that this is part of our strategy that we're executing. We used to have more first party. First party, like I mentioned, is when we buy the stock ourselves and we sell. Okay, we recognize the full value of that item in revenue. But marketplace, which is third party, when the seller puts something up for 10 naira and our commission there is 2 naira, the only thing we recognize in our revenue is 2 naira. Okay, so over time, if you look at the pure revenue part, because we are every year reducing the component of first party, you will see that the revenue line should, because of the way we're executing our strategy, reduce over time. But what you need to look at is, in concurrence, how is our marketplace revenue growing? Okay, so marketplace revenue versus last year grew at 102%, as we released in our first quarter results just now. And it's made up of multiple things. It's commissions, it's value-added services for sellers. So value-added services in terms of logistics services we provide for them, advertising services, placement of banners, performance marketing, which we do on their behalf. All those kinds of things are components of marketplace revenue. And you see that growing year on year.
Now, I'm just wondering, 102%, that's a high number. Is this something that is sustainable? Perhaps some guidance for Q2 numbers?
So the reason for that is because a lot of these services we were providing free for sellers. So we're just at early stage of monetization, and that's why you see that kind of growth. Over time, we want to build a platform where actually you have multiple kinds of services which sellers value that we're providing. They find advertising services valuable. They find the fact that they don't have to run their own logistics valuable, and so they pay for those services. Obviously, consumers find the fact that there's a delivery charge. They don't have to drive their own car to go and pick up the item, and we can bring it to you, to your place. Is a valuable service. So that's the way we continue to grow, because that's what you call monetization now. That's the monetization of the platform. But like I mentioned before, the reason why it's that way at this stage is because this is something we're not charging for. We're providing that service, but not charging for it, and now we begin to, sellers begin to see the value and begin to also pay for it.
And more inclined this time to actually pay for that service.
Yeah.
I mean, just looking at the overall business environment, the e-commerce space, like we mentioned earlier, it's not an easy place to do business. I mean, yes, it's a huge consumer market, but the logistics alone can kill the business as it were. But talk to us some of those big lessons that you've learned as a company, Jumia Nigeria, maneuvering the space.
Okay.
Maneuvering
in the logistics space.
Your day-to-day.
Sure.
Yeah.
So on the logistics part, one of the lessons we learned very early is that you don't have one single logistics player that you just plug into and then you can forget about logistics and just do your e-commerce, which is just making sure you have the right assortment, you have the right price, you have a wide selection for consumers and so on. No, we actually had to now build systems and technology to run logistics, and then went out and found third-party logistics players. So people who have trucks, vans, tricycles, they have all the assets for logistics, but they didn't have the technology to do it efficiently. So we invested on the technology part and then integrated them into our platform to then use our tools, our technology to be able to deliver on our behalf. So it's worked. It's a fragmented market. Ours is a fragmented market, which is what I mentioned before. We didn't just plug a model for somewhere and implant it. It would never have worked. So that's what we did, given the fragmented nature of the logistics play in the country. And we continue to build that out because we still see that a lot of our partners still have more capacity that we can put more scale on. There are also new partners who we haven't even started using yet. So there's a lot of growth potential.
No, for a country like Nigeria, or a continent like Nigeria, like Africa, apart from logistics, when you look at other more advanced e-commerce markets like US, I mean, very huge market, China, very huge market. What are other differences you see in terms of what they have in place, perhaps something that you could find useful or just cannot be applied here and has to be built from scratch?
So a good one would be payments, for example. So those markets, as you know, they are fully prepaid markets, right? However, we are also very cautious. We know our own environment, and we know that we have to build something that is fit for purpose. We're seeing more and more adoption of online payments of Jumia Pay. In the fourth quarter of 2018, 54% of the transactions on our platform were through Jumia Pay. So that's good. It's good progress. And this is something we launched just 18 months prior. Okay. Now, why is that possible? Because with Jumia Pay, we don't restrict our consumers to one type of payment. It's only cards, or it's only mobile money, or it's only bank transfer. Every type of payment method that a consumer has, we integrated under Jumia Pay. Okay, so that one thing to learn from them, of course, is prepayment, but it's a journey for us also. So we're starting from somewhere and we're growing gradually.
Yeah. Looking at where you are in your strategy, I know that right now you're in 14 countries in terms of footprint. What is where are you in terms of how you're advancing this? What is the big picture? Okay, so big picture for Jumia Pay, for example, we launched initially in Nigeria and Egypt. Okay. So now we are rolling it out across other countries in the group. Out of the 14 countries in the group, we're rolling it out in other countries as well. So that's the way we see that evolving over time. Now, we don't anticipate, if it happens, it will be fantastic. We don't anticipate that we're going to be a full 100% prepay market in the next 2 years or 3 years or even 5 years. We think that cash on delivery is still it's something that is relevant in our environment, and to the extent that it is relevant to our consumers, we will always have it. But of course, we want to see that we have more customers who trust on using online payment just by making sure that we have multiple ways in which they can do online payment. Okay. Yeah. Now we have about 3 minutes left. Let's talk about you. I mean, CEO of Jumia. What's it been like for you? What is that big lesson you've learned? Perhaps you didn't see coming. As CEO of Jumia One, and what is it that keeps you up at night when you think about this company?
What keeps me up at night? That's a very interesting one. I would say it's 2 dimensions. One dimension is because we're growing so aggressively and year on year. It's if I look at it, I say to myself, I have multiple things. I have the marketplace done. We have logistics done. Payments coming along nicely, all done. Funding, we have funding in the bag to take us to the next milestone. So it's really about how we make sure that we are building a good base of middle management to support the long-term growth of the business. So as you know, because we're still 7-year-old max, the industry in the continent, one can argue, is just about 7 years old. So I don't have a strong bench of experienced e-commerce general managers that I can just tap from the market. We have to build it from the ground up, from our system. So that's one area. The second area, and for me, keeping up at night is more like, it's exciting for me and I'm figuring out, so how do I do it, The other part is adoption. So really, here we are. The data tells us that we have the market share. 80% of people who shop online have shopped on Jumia. The awareness is there, 90% is there already. We have the consideration, 74% of people who haven't shopped online before already know Jumia. So the real things that we need to work on is how do we continue to drive engagement and adoption? How do we increase the number of people who can try? Okay. And, back to the cash on delivery, it is one of the mechanisms for people who want to try for the first time. To say, okay, be comfortable, no risk, try it, buy the product, you can pay when you get it. So thinking through what are the other mechanisms, what other ways in which we can drive that adoption is what I like to imagine, what are the levers at night, yes.
We're going to have, thank you so much, Juliet, for talking to us today. And
Thank you.
Well done, and of course, all the best. Hope to have you back again to hear more about Jumia.
Thank you very
so
much.
much for having been on the show today. I've been speaking to Juliet Anammah. She's the CEO of Jumia Nigeria. Well, that's our show for today. Thank you so much for being a part of it. Remember, you can watch the show at 5 p.m. West African time daily and have access to all previous episodes of the show on our website at cnbcafrica.com. You can also stay engaged with the hashtag Beyond Market. And of course, you can follow my Twitter handle too at Esther O. Awoni. From myself and the team, it's bye for now.